Now to our business agenda. US jobs roared back. 227,000 jobs. It was higher than expected. A strong rebound from the month before needs context. The context is the labour strikes, Boeing, for example, and two major hurricanes which took their toll. November's unemployment rate actually ticked up 4.2%, but it has been above 4% now for some 6 straight months. Now, the Fed Chair Jerome Powell gave his verdict on the state of the economy earlier.
Growth is definitely stronger than we thought, and inflation is coming a little higher. So the good news is that we can afford to be a little more cautious as we try to find neutral.
The latest economic numbers at the moment. So we have GDP, a solid 2.8% in Q3. Inflation just marginally higher, 2.6%. First time it's risen since March. But the preponderance of views is that the wage growth is not. It's about 4%. You've got productivity of 2%. Therefore, you're believing that inflation is well contained at the moment, and certainly not the accelerating rate of unemployment is not an issue. Investors, therefore, are now expecting the Fed to cut interest rates this month. The target range comes now then down to 4.25 to 4.5. The acting Labour Secretary, Julia Coronado, says the administration, the Trump administration, now has been set up for success.
The reality is that much of what we've put in place, the benefits of those things are going to be seen in 2 years, in 4 years.
So Julia Coronado is the president of the MacroPolicy Perspectives and a former Federal Reserve economist. The core issue here, because the numbers significant in November and December, are this is the economy that Donald Trump inherits. You know, people are always saying, we inherited a disaster. We inherited a crisis. We inherited a this, that, and the other. So we've got this number. He's actually being handed a really good economy.
For the second time, yes. He's being handed a Goldilocks economy with solid growth, moderating inflation, that good self-reinforcing feedback loop between hiring and spending nicely intact, and a Fed that's on a rate-cutting campaign. So pretty ideal circumstances to take the reins of the U.S. economy.
Because which arguably is going to get stronger because we're going to have another Fed rate cut. I assume, well, actually, I won't assume. Are you in the camp that believes there will be a rate cut in December as well?
Yes, I think that we'll get the rate cut in December, and then they'll strike that more cautious tone you just referenced from Chair Powell, that from here on, they're going to take a little more time between rate cuts, evaluate the landscape, make sure inflation continues to cool. So they're going to slow down the pace a little bit next year. So it'll be both kind of a good news, but also another dose of caution.
They have to be careful because many of the policies that the administration, incoming administration, are putting forward are inflationary. So we've got tariffs, which are inflationary. We have got obviously a loosening of regulation that is potentially inherently inflationary. We've got tax cuts. How could I forget those? Definitely inflationary, and more government spending. Traditionally inflationary.
Don't forget immigration restrictions, also inflationary. Immigration has a huge tailwind for the U.S. economy and a big differentiator across other countries. So turning off that spigot is going to take a toll on the run rate on growth and potentially put some upward pressures on inflation as well. So yes, the entire package looks like it poses some inflation risks for the U.S.
If we are in a Goldilocks scenario where essentially you really would like rates to be heading to the neutral, which is what, 2.5%, 3%. We can argue about a blip here or a bip here or there, but they're going to want to watch and see how much leeway do you think they're going to give the incoming administration before they stop cutting?
Well, I think that, again, we have the advantage of the Goldilocks economy, which, as Powell cited, gives them some time, some sort of the luxury of taking a little more time before making decisions. that sort of sets us up for a skip in January and the next potential cut being in March. By March, I think we're going to know more about how significant is the tariff campaign we're looking at, how near term. Same with the immigration, the mass deportation campaign. We'll just have a little more clarity. Fiscal policy is probably going to take most of the year to legislate, so that's just not going to be a near-term issue for the Fed. But the other two policies might.
So, forgive me, we have a delay. Forgive me. If the stock market is juiced up because of deregulation, crypto and the like. Now, we have a wealth effect then. People feel wealthier, they spend more, that's arguable. Is a rising stock market, in your view, a disproportionate rising stock market, is that inflationary too?
That's a really great question, and it's a complicated answer because we have been seeing an increased discrepancy in U.S. economic performance amongst consumers, with middle and lower income consumers bearing the brunt of higher interest rates. We're seeing rising delinquencies on loans. We're seeing consumers at the middle and lower ends being more price sensitive, more cautious. Meanwhile, record stock prices are fueling a wealth effect at the top. So we're already dealing with this sort of two-speed economy. In general, we think inflation is set at the median consumer. That is, the wealth effect can drive consumer spending. But if the average consumer is price sensitive, that's what's going to be captured in the CPI and other metrics of inflation. So I don't think the wealth effect is inherently inflationary to consumer price inflation. But it is a complication for the Fed in terms of who are you setting policy for?
Right.
You don't want to cut rates to juice up an already buoyant stock market with stretched valuations necessarily. At the same time, you do want to provide relief for that middle income consumer that's been paying a lot higher interest rates on their credit cards and on their car loans. So, it's a complicating factor for sure.
Grateful for you tonight. Thank you. Have a good weekend. Thank you so much.
You do the same.